Hello everyone, welcome to weekly lecture videos once again. In the last two videos, we learned about FinTech applications and FinTech risk. And this is the last video this week where we are going to discuss FinTech regulation in Australia. The explosion of Australian FinTech startups and businesses in recent years has disrupted the financial services industry as well as the legal regulations surrounding this delicate part of the economy. Currently, there are over 600 fintech companies operating in Australia, and they are predominantly regulated by two regulatory bodies. There are ASIC, Australian Security and Investment Commission, and APRA, Australian Prudential Regulatory Authority. If a fintech company engages in any of these six activities, it must comply with the regulations by ASIC and APRA. What are the six activities? They are financial services, consumer credit lending, registering and disclosure obligations, consumer law requirements, privacy and anti-money laundering, and counter-terrorist financing requirements. So if any of the fintechs engage or involved in any of these, they need to comply with the regulations set out by ASIC and APRA. So first of all, ASIC's regulations for fintech. ASIC is the primary regulatory body for credit and financial services in Australia. The National Consumer Credit Protection Act 2009 and the National Consumer Credit Protection Regulations 2010 provides ASIC powers to grant and regulate credit licenses to companies. So what are the rules or the regulations with regard to fintech? First of all, fintech and Australian financial services license. So generally, a fintech will need to obtain an AFS, Australian Financial Service License, AFSL, if it engages in activities in relation to financial services. Okay, so for example, financial product, custodial or depository services, registered managed investment scheme, crowdfunding service, traditional trustee company services. So if a fintech is involved in any of these, then it needs to obtain a license, which is called FinTech, which is called Australian Financial Service License from ASIC. Okay. And another point is Australian credit license. So according to ASIC, if a fintech company engages in any credit activity, it also obtain an Australian credit license. You understand my point? So in general, if a fintech is involved in any of these five that I just discussed, then a fintech needs to obtain an Australian financial service license. And if a fintech is involved in credit, okay, in credit activity, then it also needs to obtain an Australian credit license. Okay, so the rule with regard to this is a fintech must obtain an Australian credit license, have an authorized representative to engage in credit services, or must get an exemption from taking or obtaining this credit license. Okay, so ASIC requests companies to hold a credit license for activities such as credit contracts, consumer lease, mortgage, or under guarantee, and so on. So in these cases, a fintech also needs to obtain an Australian credit license. APRA and fintech. So the regulations that we discussed in the last slide were controlled by ASIC. So now fintech regulations by APRA. As Australia's main banking regulator, APRA's role is to protect the interests of depositors, policyholders, and superannuation fund members. It oversees the conduct of banks, credit unions, building societies, general insurance, and most superannuation trusts. APRA currently regulates institutions and ensures that there is a stable, efficient, and competitive financial system. As of today, APRA requires any company that conducts a banking business, such as taking deposits or lending money, to possess an authorized deposit-taking institution's license. So which means that, in general, if a company is involved in taking deposits and lending money, it must obtain an ADI license, authorized depository institution's license. However, with regard to a fintech, if a new fintech startup or a company entering the banking industry, it may be eligible for a restricted ADI license. Okay, and under this new framework, that means under this restricted ADI license framework, a company can operate a limited range of banking activities for up to 2 years, whilst building up company resources and financial capabilities. Once the 2-year period ends, the fintech or a startup company must transition into a full ADI license to continue operating in banking industry. Alternatively, if the company fails to meet the prudential framework requirements of an ADI, it will have to cease operations, right? And the eligibility to obtain the restricted ADI license is in order to maximize a fintech's or a new startup company's chances on successfully obtaining a restricted ADI license is that notify and engage with APR at the earliest possible to discuss relevant requirements, and ensure that the company has implemented proper policies and is compliant with the application requirements. For example, there is a capital requirement of minimum $4 million. So to get a restricted ADI license, a fintech company must have a minimum capital of $4 million and prepared a viable strategy detailing company's plan to meet the prudential framework within the 2-year period. A company's ADI may take up to 3 to 18 months for APRA to assess, depending on the complexity of the company's banking plans. Other regulatory framework. If a fintech company engages in banking and digital currency, for example, cryptocurrency or crypto assets, it must also comply with obligations under Anti-Money Laundering Terrorism Financing Act and Anti-Money Laundering Counterterrorism Financing Rules Instruments. So which means that, look, what we discussed previously, that a fintech needs to take Australian Financial Services license, needs to take Australian credit license if it is engaged in credit. Then if a fintech or a fintech company engage in deposit taking and lending, then it can take a restricted ADI license. And now, if a financial institutions or a fintech company is involved in digital banking, digital currency, then it must comply with Anti-Money Laundering and Counterterrorism Act 2. Okay. So a company will be subject to AML, I mean anti-money laundering and counterterrorism financing, if it is an entity that provides designated services with an Australian connection. Okay, and so designated service means involved in digital currency cross-border payments. Okay. So in 2018, the Australian Transaction Reports and Analysis Center, AUSTRAC, okay, AUSTRAC became the governing body for anti-money laundering and counter-terrorism. Okay, so if a company is a digital currency exchange provider or cross-border money transaction provider, so it must adhere to the following: what? Register and enroll with AUSTRAC exchanges that take place. Take appropriate steps to verify customer identification, adopt and maintain an anti-money laundering and counterterrorism financing policy, and monitor and report any suspicious and large transactions. So to provide you a summary of fintech regulation in Australia is, fintechs must comply with both ASIC and APRA, have an ongoing obligation to fulfill its compliance with AML, Anti-Money Laundering and Counterterrorism Financing Act. Unless there are exemptions, a company must obtain an Australian Financial Services License, Australian credit license, if it engages in financial services and credit activities respectively. If any company engaging in banking services, which involves depositing money or advancing sums of money, must apply for an authorized deposit taking institution's license. And unless a company is a recent entrant of the banking industry and has limited resources, it can apply for a restricted ADI and can engage in limited banking activities up to 2 years. After the 2-year period, the company must apply for a full ADI. Furthermore, if a company engages in activities pertaining to digital assets, digital currency, so it must comply with AML, Anti-Money Laundering and Counterterrorism Financing Act, and must register exchanges with AUSTRAC. Okay, so that's the end of our discussion this week. So essentially, in 3 separate videos, we learned about fintech applications like algorithmic trading, Internet of Things, biometrics, and big data, fintech risk and opportunities. And in this video, we learned about fintech regulatory regime in Australia. Thank you very much.